Price action means just what it says, the action of price, and it is extremely helpful in predicting the future direction of markets. Markets are unstructured and random. No one really knows what the market will do and when, but price action acts as our guiding light in the market, by providing us with the organized and structured way to study the markets, to make a probabilistic prediction and to make money in trading. If you're a beginner, consider yourself lucky, because you have found the best video on internet to begin your price action trading journey. In studying price action, we mostly use naked charts, along with some lines here and there, but the use of indicators is negligible. Forget indicators, make price action your edge and see how quickly everything changes in your trading. There are 4 pillars of price action that we are going to discuss in this video, and believe me, among these 4 pillars, even if you get mastery of 1 or 2, then sky will be the limit for your earnings in the market. Let's begin. Pillar number 1, candlesticks. Candlesticks are simple red or green bars, with shadows, that tells us open, high, low and close price of a trading instrument in a given interval of time. They are truly powerful because they tell us the exact sentiment of the market in that time interval. A long green bar with no shadows tells us that the market is extremely bullish, and a red bar with no shadows tells that the current sentiment in market is bearish. Similarly, a doji, a candle with small body in the middle and the long wicks on both sides, tells us that there is a state of indecision in the market, and it might go either way or might not move much at all. Candlesticks and their formation patterns can be used to accurately predict trend reversals. For example, a doji candle after a sharp bullish trend is an indication that now buyers are no longer interested in pushing the market further up, and sellers can get in control and bring the market down. There are so many profitable setups that can be built just by using candlesticks itself. I will bring a much more detailed videos on candlesticks that will help you to identify price reversals with very high accuracy, so please make sure to subscribe. Pillar number 2, support and resistances. Supports and resistances are the levels at which the market has previously shown some change in its behavior, and that behavior is likely to repeat when the price reaches that level again. A support is a level on a chart where the price has high probability of halting a downtrend and reversing to an uptrend. A resistance is a level on the chart where the price has a high probability of halting an uptrend and reversing to a downtrend. Support and resistance are also called demand and supply zones respectively, because at support, buying power overtakes the selling power, which causes demand to increase, hence, price stops falling and starts rising. Similarly, at resistance, selling power overtakes the buying power, which causes supply to increase, hence, price stops rising and starts falling. Support and resistances provide a kind of structure to the unstructured market. They are used by everyone, from small retail traders to big institutional investors. Always remember one thing. To make money in trading you have to be on the winning side of the market, on the side where most of the people are, so it is a good idea to use what everyone else is using. And, because almost everyone is using support and resistances, they are immensely powerful. Support and resistances act as price barriers, they are like walls of dam that the price struggles to break. But once it successfully breaks it, then it moves fiercely towards the next important level on the chart. It is called a breakout. Because breakout moves are very fast, they sought a lot by beginner traders, but most of the time they get trapped in the false breakout scenarios. Here is a pro tip that will save you from such situations. Never, ever, trade a breakout on first attempt. Wait for it to retrace to that support or resistance and test it again. In short, don't buy here. Buy here. It will save you from getting trapped. To learn how to trade a breakout like a pro, subscribe because there's a video coming on this topic soon. Support and resistances work on all time frames, from 5 minutes to daily. There might be different support and resistances for different time frames, but the bigger the time frame, the more effective its support and resistance will be. Pillar number 3, trend lines. Trend lines are support and resistance at an angle. This angle could be positive or negative. The angle is said to be positive for rising trend lines, and it is negative for falling trend lines. Trend lines give us the general idea of the trend of the price. If price is making higher highs, this creates an upward sloping trend line, it tells us that prices is in an uptrend. If price is making lower lows, this creates a downward sloping trend line, it tells us that price is in downtrend. They also give us a general idea of where the price retracement might occur during the trend. That is where the profit booking will happen, and where more people will get in to ride that trend. These are also extremely effective, just like support and resistance, because so many people use it. The tricky part here is learning to draw the trend line right. Most beginners draw it wrong, which creates more confusion than clarity. When you learn to draw it right, you will be astonished to know how well they work. To learn how to correctly draw and trade the trend lines, stay tuned to the channel. Pillar number 4, channels. If a price is bound on both upper and lower sides, it is said to be in a channel. Channels are horizontal when bounded by support and resistance, and they are angled when bounded by trend lines. They are extremely important in range-bound markets and give us the exact level to get in and get out. They limit price movement to a small zone, which means once the price breaks out of it, it will lead to a big move. The longer the price stays in a small channel, the bigger the breakout move will be. Trading horizontal channel breakout is different than trading angled channel breakout. This is because when price is in an angled channel, it is not stationary, it might be falling or rising, though slowly. These are the 4 pillars of price action that creates profitable patterns on chart. Once you start to understand these pillars well, you won't need to mug up the chart patterns, because you will be able to see exactly what the chart is telling you, and making profits in the market will be effortless. Please like the video if you enjoyed it and subscribe to the channel. Thanks for watching, and I'll see you in the next one.